Eyes can see this, enter trade, leave the trade. Immediately you counted like 5 candles or 4 candles. Let's enter trade right away. I'm going to increase my lot size a little. Let's take 30. I buy. I will be taking like 3 positions. Please be careful about your lot size. You see that? So, do you see that? I have over $200. Do you see that? So be careful about your lot size. What that means is that if you see any spike now, I am going to go out of the market. Do you see that? Do you notice anything now? So just that I used a big lot size, they are restricting me from entering the trade. What do you notice now? So if anything should happen to this market I entered now, I will be forced out of the market because the spike will be massive. Do you get that? The spike will be massive. So my name is GDFX and I am a forex trader master. We are into the business of helping men and women to trade, and our business is to make sure that you will make money and at least be of good cash, okay, so that you can be able to handle some responsibilities around you. We don't have any intention of duping anybody or scamming anybody. What we do here is to drop strategies, and if you check any of our strategies and none of them is working for you, maybe it didn't work for you, or maybe you don't have the right knowledge to apply it, but know that it's not working. All our strategies are working depending on the knowledge you have and the capital you are using, because you cannot be entering trade on a higher time frame with a small money. All right, so this is the trade I just entered. Can you imagine, in few minutes I just make $4, and you know what that means? So how do I enter this trade? I entered this trade on the base of what I'm about to show you now. And if you can be able to see the same thing I'm about to show you, you will enter your trade and make like $5 each time you see this opportunity, $10 each time you see this opportunity, and you will leave the market without stressing yourself and without being caught by any spike. And by so doing, you can be able to smile home to the bank each week. This is the trade, and I will call it off here so that I will concentrate and explain my trade and explain it. Okay, all right, this strategy works for boom 300, crash 300, V10. Let me see V10. Let me see v volatility 10. Let me see. Okay, the remaining small thing. Let me see the higher time frame. No, this one can work. It works for boom 1000. Boom 1000 is consolidating. At this point, please avoid the market because it may continue this way. From here, it can get to this place. Do you see where I position it? So it can get to this place without making any further move. So if you enter your trade now, you'll be frustrated, and by so doing, you may lose your money. So stay out of the market. If you see anything of this sort, don't attempt to enter. You can only enter on the base that the market must have crossed either it has breakout from this board I dropped here now, this right angle triangle. Is that it has breakout to go down or it has breakout to go upward. This is how the market works. Okay, market don't have respect for your wish. Market don't have respect for your idea or your psychology. What market responds to is the knowledge you have towards it. All right, so please don't make that mistake. So why did I enter that trade, and how does this strategy works? Number one thing you should know is this: for any strategy to work for you, you must know the little secret about the strategy. And mind you, no matter the strategy you are using, every strategy responds to the price action. every strategy responds to the price action. What does that mean? It is the price of the sellers that moves the sellers to go and buy. The capital they have is the momentum they have. Okay, the loss of momentum in buyers is that the money buyers are using is going down, which means the price must change. Do you understand it? So the price must change because sellers has more momentum now. For that reason, the presence of buyers will be going down, and by so doing, sellers will be taking over. That is how market works. So please don't make that mistake of trading against the trend. It's very, very dangerous. Look at what I'm showing you. Now the same trade, the same market work for crash 500. At this point, I should enter trade, but I have to watch for something because this market has finally break out from this place. Do you know what that means? It means that the market will trade uptrend for hours. That is it. It should trend uptrend for hours. But one thing I should wait and look at for is for it to test it for the first time. It should test this uptrend. It should test it with one little more spike. If you test it for the first time and the momentum is so strong, it will keep going. It will test it to the second time. By so doing, you can have your trade moved in such a case that you'll be surprised how it happened in your lower time frame, because what you'll be counting is uncountable spike. Scalping. Like he tested it here 1, tested it here again 2, and the thing is now moving up. So by so doing, I didn't be that I was in the market then. Once I saw this one, saw this second one, and allow it cross this one because the price, the sellers, the buyers has momentum and they crossed it. Now look at, I will have counted 1 because this is where I should have entered my trade. I will have counted 1. Okay, let me just place a horizontal because it's just like a kind of teaching. This is where I should have. From there now, that is where I should have entered and look at it, which means I've gotten like one particular candle on 5 minutes time frame and a kind of strong listing. And by so doing, if this thing should pull back now, if this candle should pull back now, it will stop here. It will not touch your capital. Do you see it? It will stop here now because the candle that opened is a bullish candle. It has a momentum to go upward. So why do people make mistake? They made mistake because each time they enter trade, they thought it will reverse, not knowing that the candle that just opened has a strong momentum to go upward. So why did I enter that trade at that moment? And why did I make that profit? I make the profit on a condition that there is a cross above the 200 moving average. There is a cross above the 200 moving average. And if there is a cross between the 200 moving average, it's a strong momentum that something is going to happen. Let's just backtest a little and see the nature of the market. And I will show you 2 things you should look out for. Then you'll be entering your trade on crash, on boom, on volatility. All of them are the same thing, even on your currency pairs and whatever. Number 1 thing you should look out for is anytime there is a cross above the 200 moving averages, like what you can see here now. Like what you can see here. Look at what do you know why people don't, anyone that I'm teaching must do the first assignment? The reason is because if you don't know how these things respond to each other, you'll be messing the market up. So look at it. Now that this market has crossed here, do you know what it means? It simply means that after 200 days of moving market and 50 days of moving market and the 9 days of moving market, the market now decided to move forward. So now that it has moved forward, it simply means that the 50 and the 9 and 200 have agreed somehow. What do I mean somehow? Based on the nature of sellers or buyers. But this one now, buyers have decided to take up the market from the lower time frame here now. So they crossed each other, and as they cross each other, it's a sign from the structures of the market or from the structures of the FOREX or the brokers. The structure is that each time these things crossed is a sign of a strong momentum. Either it goes down, it's a strong of a sell momentum, but this one, now that it has crossed, it's a sign of a buy momentum, and most times 100% of each cross always yield to a higher strong uptrend. 100% of these things responds to higher uptrend. So now, anytime you see this cross, each time you see it, you have to see another thing for you to be sure. Now, go down to your window one. If you go down to your window one, check the red line that is working with the MACD. Check that thing. Did it cross above the 10, the 20? If your answer is yes, that means that you have a good entry point. Now that it crossed above the 20 and another one is coming up from this particular 10, this 20, this blue line, and they crossed as this one has crossed, you have a good entry point. Look at it. Do you see what I told you? This is it. Do you look at it? Look at it. Look at it. So each time both of them cross together, you must see at least, you must Skype like 5-10 candles and you are out of the market. Have you seen it? Look at it. And for spike, for you to catch a spike, how do you know that it is time for you to catch a spike? Now look at this thing now. How do you know that you can catch a spike? Do you see what I told you today? If you must enter your trade in any of these things, I told us, if you listen to my beginning, that is at the early stage, I told us that I should enter trade, but I cannot enter trade here now. Why? Because this thing need to test. This thing need to test itself. And if this thing fails to test itself, then that means that the market is not, the buy momentum is not strong. But something happened. If you go to your 1 minute time frame, I draw a line here that if you tested this thing here, that you should be I should be counting 1, 2, 3, 4, 5, 6, 7, and I'll be out of the market. And I told you that if this thing should spike, that it will not cross this line. Get me? Listen to me. The first spike that dropped did not touch this place. And that is the first test. Do you know what that means? I am sure of what I'm saying. It is the first test. So now that it tested it the first time, now it tried to move the second one. And now, since the momentum of the market on the lower time frame is not that strong, the market now has to put the second time. And since the market tried the second time, it may also put the third one. And after that third one, it will not retrace. But why did I say that earlier? So if you have plugged this particular horizontal, you take your trade from here. 1, 2, 3, 4, 5, 6, 7. You are out of the market. Okay, peradventure you are not out of the market and you go to this place and spiked, you will still close your trade with your same capital because you will not lose anything. The only challenge there is that you will not have any profit again, but you didn't lose your money. That is how and what I said. So, but after this market must have tested it, and if this market manages to move across this thing again, if this market moves across this particular line again and show up, believe me, you will make money. So why do people make mistake? They make mistake because they have seen it cross this line. They will enter trade without knowing that the sellers will come and challenge it. First one, challenge the second one, then the third one, the market will move up. That is why we'll see what we call support zone. It is the testing that brings about support zone. They test it 1, test it 2, test it 3, and give them support to move forward. Then the resistance zone, they moved there and they said, no, you can't go. They resisted it, the first one, to test the strength of the momentum for it to move up. They try again and they fail. That is how the market happens. So I don't know why I should be giving strategy and leave every rating for my student. But please enter your trade anytime you see these signals. Number 1, the downtrend here. Anytime you see these things that cross to each other, It's a good opportunity, mostly on your lower time frame. On your lower time frame. For spike, anytime the red touches, anytime the red touch and the blue together, expect a spike. But this one now is not a good entry point because the market is testing. Get that, the market is testing the momentum. It's testing the strength of the of buyers. Please get that into your mind. Please get that into your mind. Look at what I'm saying here. Look at the one I'm talking about, this place here. Please, this is the one you should look out for if you want to catch spike. This is the one you should look out for. And how do you know that the spike will continue? Anytime you see this cross below the blue. All right, let me make it simple. And please remember that the zoom level is 2, zoom 2, and zoom 3. Please don't use the large zoom like this. No, don't use it. It's wrong. It's very, very, very wrong. This is the right zoom to use, this one and this one. Just this is good for you to use. All right. Okay. Now look at this thing. Let me get a clearer this thing. Anytime you see the green and the red below the blue, it has stepped into spike zone. And the cross below the blue, it has stepped into a spike zone. Get that you have an opportunity to catch a spike. No matter how you try to retrace, if it has not crossed the blue again, you are still on a spike zone. Get that. Is from GDFX, and I'm sure of what I'm saying. Please get that. Don't enter spike